Hello guys, first happy Easter. Hope you have enjoyed your day. Most of the people are off, but I understand that some people are working also. So happy Easter. Now today I have just a question about the trading orders, because when you go to your platform you will find a lot of things and some people get confused. So for me, I want just to simplify these things into two orders only. Okay, don't complicate things. Things are very easy. Okay, I will just try to explain. Check with me. Now the first thing is number one. So number one, always when you want to buy a stock, let's say you want to buy a stock, it shows you, most of the time it shows you 100 shares. Now why 100 shares? Because most of the people, they buy 100 shares, so it is the standard. And then you you change these 100 shares or whatever shares you want, and you will see, let's say the stock is XYZ. This is the stock you are buying. It should be showing into your window. Okay, so 100 shares. So you try to change this 200, 300, 1000, 10,000, depending on the stock. Okay, now the second thing you should look at here, you will find limit. This is the first one you should see. Now whatever you want to sell or to buy, you always find this as a standard. This is the standard that you always see. Okay, just a standard, it means you will, most of the people see it in their platform. So, and then you should see the bid and ask. Very important to see, because there are some brokers that they don't offer the bid and the ask, and it is a mistake not to see the bid and the ask. Now why is that? Now the ask is when let's say it is $20.01, the bid is $20.00. Always, most of the time, you find the ask is more than the bid. Now, you as a trader, you want to buy 100 shares. Now you buy from the ask. The ask, what does it mean? It means who asked you to give $20.01? Who? You should ask yourself, who? Is it your broker? Is it the exchange? Who? So when you say who, it is what we call the market maker. Market maker is someone who is behind it. He is in the exchange offering the stock. Okay, is the market maker. That's why these people, they work in the market belonging to brokers or firms, and they put bid and ask. I say to you, you want to buy for example XYZ, so they tell you it's $20.01. Now let's say you want to sell. Okay, you just want to buy, and then you find that the stock is not good, or you get mistaken or something, and you want to sell. It's the bid. It is what the market maker asks you to pay. Okay, and this is the bid. This is what he gives you. It's $20. So where is this cent gone? It is, this 1 cent is the payment or the profit for the market maker. It has nothing to do with your broker, because your broker gets commission. Okay, broker, he gets what? Commission. So this you should just understand. This is the simplest thing you can see. Now, so all the information are there. You want to buy what? You want to buy this stock, which is called XYZ. It's just an example. Okay? How many shares? 100 shares. You use the limit order. It means I want this. Or what does it mean, limit? Limit is this price, which is $20.01, or lower. This is the thing about, this is the tricky thing about the limit. The limit, it means you ask your broker to fill this transaction at $20.01, but when you click, for example here, you click submit. When you click submit, this order will go to the market maker. If the market maker has put this down, you will get better price. Let's say sometimes you see $20.01, but you will get $20 only, which is better than $20.01. Okay, which is better. Now, when you ask me, oh, what's the bid? The bid will change. For example, here it will change to $19.99 because always there is 1 cent between this and this. Okay, so to understand, we use this limit to buy. Try always to use limit, because you will see the price you are going to buy the stock. Now, for example, you begin to fill the information. XYZ is the stock you want to buy. There is 100 shares. There is limit. You see $20.01, and then when you hit submit, and your stock is your transaction is not all filled. So no, not filled. Not filled, it means you see that your order stays there and you didn't buy this stock. Now you ask yourself the question, why I see they ask $20.01 and I want to buy the stock with $20.01, but I didn't get filled. It means I didn't buy yet. So the reason for that, it might be that the ask goes, for example, to $20.02. Now, if the stock goes to $20.02 and you ask your broker at $20.01, so you can't buy it and the order is not filled. So this is just to understand how the orders are filled. So it depends on the market. Okay, maybe when you take time, you look here 100, you put 300 shares, and then this is the limit. You leave it, and you see $20.01, and then when you hit submit, the market has already changed and you don't know, especially for stocks that go so fast. Okay, so this is about the limit order. When you say limit, it means you accept the ask or lower. This is what we call limit order. And my suggestion, always use limit order to buy. At least you will see the ask and you buy from it. Okay, so this is number one. This is number one. It's very easy. You just see the limit, you put the shares, you see the ask, and then you buy your stock. Now, let's say you buy your stock and you want to put a stop loss. This is the second order. Always we put it, for me as a swing trader, when I buy a stock, I put a stop loss. Now, I will show you how the stop loss is put, okay, in terms of order. So let's go and check. Now, so whenever you buy, you go and you want to sell it to a certain price. Now, okay, So let's say you buy stock. You already bought the stock as at $20, $20.01. You bought 100 shares, and then you want to put stop loss. How can you do that? Okay. Most of the time, this XYZ, most of the time, you click on the stock. Most of the time, it's like this in any platform. But you check your platform. If you don't understand, you should ask your broker how you can sell it. Now, when you click on that, you find buy and sell. So you put sell because the other one. Now, here, when you put sell, it's always telling, it gives you a standard 100. Okay, 100 shares. But be careful. Sometimes when you bought 200 shares, it will, when you say sell, it gives you only 100 because it is the standard. So try to make sure when you put the stop loss, you put it for all the shares that you want to sell. So let's say it's 200. So you change it. So here we have you sell. Here you have 200 shares. Now, then you see limit. You see limit because it is the standard. Because the broker doesn't know what you are going to do. Are you going just to sell the stock, or are you going to put stop loss? There is no, the platform it doesn't know what you want to do. So you should make it clear. Now this limit, okay, you find, for example, an arrow here, a menu. You should change this, you change it to what we call stop. Okay? You should change it to stop. So limit, no limit. Because when you say limit, it will sell right now the stock. So put stop. Some brokers have what we call a stop on code or whatever is the wording. But you know, the wording are not quite exact, but try to see when you find stop. Now, when you want to stop, here we have submit, for example. Submit here. Before you submit, there are two things you should do. First, you find, for example, the bid and ask. Let's say it's the same thing, okay? It's $20, 1 cent, $20. Okay. Now here, you should put what is the price that you want to sell your stock if the stock goes down. I give you an example. Let's say it is $19.50. So you should put this number. Don't forget it, because if you put limit or you put stop, and you leave it and you click submit, you will exit the trade, okay? You will sell all your shares and you don't know. So please check it. So you put stop, then you change the price. This is the stop loss. It means if the stock goes down to 1950, you will sell and you will lose $50 for your stop loss. Okay, because if you have 100. Now, if you have 200 shares, you will lose $100. Okay, because it is 50 cents. 50 cents. Okay, buy 100 shares, it will be $50. Then if you have 200 shares, it will be $100. Okay, so $100 is your risk in this trade. Now, there is another thing that you should do. Most of the people, they don't know what to do it. I will show to you. Excuse me. When you see the time, there is a box that speaks about the time in force. You should put GTC. You should change this menu and you should have GTC. Now, what does it mean, GTC? It means good to cancel. What does it mean? Now, good to cancel, what does it mean? It means you ask your broker that this trade, if it continues going up or whatever, it should stay generally for 2 months. You should ask your broker if it is 2 months or 3 months, okay? Some brokers have 2 months, sometimes they have 3 months. Now, what does it mean, good to cancel? It means this trade will have this stop loss for 2 months. Now, I understand maybe you later you change it or you do whatever. But I'm saying just that's good to trade, you should do it only once. And this is most of the time it's 2 months. It means you don't go and do stop loss each day. You don't do it. You do it only the first time. And then later you will decide what you want to do. You want to change the stop loss or you want to leave it as it is. So this is the main thing you do as an order, which is stop. Now, what does it mean, stop? Stop means if the stock now it's $20.01, you bought it. If it goes down to 1950, this stop becomes another order called market order. Now, what does it mean? It means market order. What does it mean? It means you ask your broker that if the stock goes down from $20.01, it goes to 1950, you sell all your shares with a market order. Now, market order, what does it mean? It means you sell them by any price that you find in the market. Any price. It could be 1950, it could be 1949, it could be 1930, whatever is the price, you will sell your shares. And this is how the stop loss works. So, in general, we are using only 2 orders. One which is called limit order, and this is called stop order. Don't forget to put good to cancel. Good to cancel, it is just that your stop loss is always used during the trading day, which is from 9:30 a.m. okay, to 4 p.m. for 30 days. Each day, this stop loss will help you without making the stop loss each time in the morning. You do it each time. So this will be like automatic. Whenever the market opens, your stop loss is 1950. If the stock goes to it, you will sell. But what if the stock is going up? This will be the same for 2 months or 3 months, depending on the broker. So if you don't know how long this good to cancel, you should call your broker and ask him how many months. Okay? So you should ask. Because let's say it is 2 months. Let's say your stock is going up for 2 months and then we enter to the 3rd month. The 3rd month, this stop order will not work, as if there is no stop loss when this good to cancel for 2 months has ended. And maybe the stock is going down to 1950, and then you will see a loss in your trade, although you have been making money. So understand that this good to cancel you should use in all your trades if you are doing swing trader. Okay? So for me as a trader, as a swing trader, it means when I do a short-term trade, whatever trade, it could be few days, it could be a few weeks, it could be few months, 5 months, 6 months, 7 months, and I always use a stop loss. Now, when the stock is going up, this is how to follow the trend. Or there are many ways to do either to change the stop loss or you don't change the stop loss. It depends on what strategy that you are doing and what's information that you have for this. But this is the basic thing that I do for many years. I am very successful with it, and there is no problem. Don't try to go to other orders that are confusing, and then it will just make trouble for you because you don't understand. Because any order, it has specific information. So this specific information, if you don't know what is it for, you think that it is like this, but it is like that, so you will lose a lot of money. Okay, so thank you very much, and again, happy Easter, and hope next week it will be better than the last week, and thank you very much.